Hello traders and welcome to another video review. Today is Friday, February 17th, 2023. Let's find out what is going on the financial markets, and we are going to take a look on the economic calendar, of course. The most important event of today, as you can see, is scheduled for release at 8 o'clock. It was released already. Retail sales from Great Britain beats the expectations. Actual reading was 0.5%, forecast was minus 0.3%, previous reading minus 1.2%. so right now we are adjusted to the upside on retail sales in the UK. It looks like it's a kind of a good data for British pound. So let's look at the medium important data as well. Of course, the core retail sales are still on minus here, and then retail sales increased to the minus 5.1%. German PPI data minus 1%, kind of a slightly better than minus 1.6 expected, but still worse than previous reading of minus 0.4%. We still have the data in form of the export and import price index from the US, scheduled for release 2:30. This is medium importance data. And then we have the data from the Canada, scheduled for release at 2:30. Virgin securities purchases and RMPI as well. So that's about it, I guess, for the Friday 17th February in terms of the Forex calendar. Let's jump to the charts, and we are going to take a look at the cable first. 4-hour chart of the British pound to the US dollar is showing us signs of weakness. It all started with this pattern here, bearish engulfing with a pin bar first, bearish engulfing under the 100 periods moving average, breakout below the 50 periods moving average. Those, as you can see, moving averages crossed in the first week of the February. Since then we are keep moving lower, despite the fact that we made nice free wave rebound. So we got this technical resistance support. Sorry, now it's technical resistance 1.1960 violated already, and it's being tested right now. We got another technical support for British pound, which is located here. This is 1.1840. So if we zoom out, we can see that this is very important level, because it's from the first week of the January 2023 when we got this nice rebound towards the highs located around 1.24. So now it looks like the momentum is negative, the momentum is increasing, and the market is heading towards the 1.1840, and we should see this level soon. It looks like the bears are in total control of this market for now, at least. We are trading below the moving averages, we are trading below the local technical support. We broke below the February low. So right now the level of, for now, it's 1.1931 is the new local low in February on the British pound. So let me just do some sort of the screenshot for that, and we can go to another market. So that was the British pound. Let's take a look at what do we have here. We have S&P 500. I wanted to take a look at, there you go, crude oil. Why I'm taking a look at the crude oil, this is a 4-hour chart, of course, because there are some kind of a data for the crude oil today. For example, data from the Canada, and the Canada is a very important country for the oil, as well as Saudi Arabia and United States, of course. What do we have here is basically an attempt to break below the night of the February low. This is 76.51, and we can go as low as the 6th February low. It was a 6th February low is 72.25. We got plenty of engulfing patterns here, so it's clear that this around the top, it's kind of a distribution. Some of you might even see some kind of a head and shoulders pattern. You have the shoulder, you have the head, you have the shoulder here. So in that situation, where is my line? There you go. The line, the neckline, basically would be from here to somewhere. Let's say this is the shoulder. Okay, let's even place it here and make it orange. So the orange potential neckline has been violated. We are now approaching this low, and then of course we can expect the market to move even lower because the momentum is negative. Right now it's 40 points only, so it's 10 point only to the extremely oversold market conditions. Nevertheless, it still looks like this market might be moving way lower. Let's find out where are the Fibonacci retracement levels on that market. Let's see how this works. Okay, this is the other way. So I will use my magnet. So this is the point, that's the other point, and what do we have here? We have 50% just above, so it just below this low here, so 76.51 and 61%. Let me just take a look for you guys. 61% is around the level of 75.50, so that's the 61%. If we break below this level, the road towards the technical support is open. Let's take a look at the Canadian dollar because we have the Canadian data as well, and as you can see, the Canadian dollar is rising. We talk about this tweezer bottom and the bearish engulfing pattern together with this kind of a interesting pattern as well. I'm talking about these two candles. Since then, wave 1 or A correction or pullback, when wave 2 or B, now we are heading higher. What has been done here was breakout above the level of 1.3475 done. Now we are trending higher. Breakout above 1. Where is my okay, I need to move out. Oh, there you go. Breakout above, where is my line? 1.3520 in progress. So it looks like this very narrow zone might be soon broken. As you can see, plenty of times market tried to break above this this blue line, and then of course well, it means that the bears were actively pushing the prices lower, but now we have a breakout. Even the last attempt here, look at this, very big pin bar. Nevertheless, this is a strong move to the upside. This might be a game changer for the US dollar to the Canadian dollar, really, because it took a real effort to break above this level. So right now we can assume that the level of what's the high, 1.3519, it will not be apparently the last stop for the bulls. I guess they are going higher, and the next level is somewhere around, let's say, 1.3664. This is the red level. Okay, so if this level is violated and if momentum will be so nice and so strong, the next level is here, the red line. Okay, we need some pullback. When we hit that black line, we need some pullback, and of course the consolidation in a narrow zone is very welcome. And then of course we can, after the pullback, after the consolidation, we can resume the rally towards the red line on the US dollar to the Canadian dollar, which means basically that the crude oil will likely move lower for in the short term. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.